All right. Thanks for coming on today. Welcome, welcome. Um, I think it's quite important for me to have conversations sometimes with some of my clients, to see where they're at, to touch base. And yeah, it's still an opportunity for stories to get told. Everyone's at different stages of their investing journey. And I like to capture that. So, first question I'm going to ask you is, what was your relationship with money like before? How did you hear about SPA? And then I'll go on to, how you found the course and where you're at right now.
I'd say I have a okay relationship with money. Before joining the course, my husband told me about the course because he
Okay.
knows that I'm quite good. I'm better than him basically when it comes to money. I'm not technical. I wouldn't say I'm a technical person, but I like to save. I like to invest, but not that I'm doing it, that I'm putting my money somewhere and they're doing all the technical. So this was really stretching for me in terms of learning all the technical things. And I mean, the way you um, laid out the course is brilliant. Us being able to watch you and follow you. I think sorry, I'm going ahead of what you wanted me to.
Go for it. I like organic conversations. I don't like
Yeah.
scripted.
Okay. So yeah, I think the way you laid out the course was easy to understand to an extent. I mean, a lot of it was going over my head
Okay.
um, when it comes to things like this, stocks and shares and stuff. I just look at figures, I think it's just me, and this isn't for me. So I went through the course, I think early when I first bought it. And then now that I've got the time, obviously being a teacher and having a 6 weeks holiday, so I just want to spend my time going through it in a more detailed way so I can actually start investing. But I think because some of the things was done, was it 2 years ago, the course? It was done during lockdown. So there's some things that are different, like, for
Yes.
example, the layouts of certain things, some of the things you're talking about. But yeah, it's all still very relevant. And so, yeah, I'm just trying to marry what I'm doing now with what you were talking about then.
Did you have any investments before doing the course in any stocks and shares, or what was it like?
Yeah, so just doing a generic S&P 500.
Okay.
So, where you just invest there and then you
Yeah.
just put money there and they do it all for you. Those are the sort of things I like, where I'm not
Okay.
involved.
No, I'm happy to actually hear that because um obviously investing in the S&P 500 is something I believe everybody should be doing, no matter what, right? Because that is the only way to make guaranteed profit in the stock market that has actually stood the test of time, where you would average about 10% just doing that over a long period of time, which is much better than leaving money in your bank. Um, and getting people set up on this and getting people active on the S&P 500 index um, is not part of the charged offering. I think this is free, it's available online. Everyone should be doing it. I shouldn't be charging a penny to get that information across. And obviously with the stock picking approach, this is another pool of capital. So that should still happen, your S&P 500 in the background. And what you're basically doing is learning a strategy that you can use to pick individual stocks and run a portfolio that way, which is what the SPA system is, which I've designed. The biggest challenge for me was to break it down in a language that people can understand, that anyone can understand. And I think, like you said, I've done quite well to do that. Um, the key thing was actually not just pulling out a system out there and saying, see you later. The key thing was actually for me to genuinely help people to use a system to pick individual stocks. I need a system. I need them to still be in contact with me and in contact with other like-minded individuals who are picking stocks, i.e. a community. And I need them to have a process that they use to monitor their portfolio. That process is staying in a group where stocks are being discussed, checking with me finally before actually buying a stock is the most important rule of SPA, especially if you've done the course, because the world is moving, some things could change. It's important to, for example, to make sure that a financial health check has been done on the stock, which you learn in session 5. That bit will go over a lot of people's heads because it is a technical aspect, but chances are someone's already done that health check. Myself, other people in the group. So the key thing is before you buy the stock to make sure it has been done by credible people, even if you don't fully understand how to do that for yourself every single time. That comes with a bit of experience. But the key thing is, do you know what? I have an investing blotter that I can record my transactions and I have plans written out that I will follow for every stock that I buy. And I've got someone who I can talk to before making the purchase, after making the purchase. And I can eavesdrop on other people's conversations on what they are doing, even if I'm not involved in those stocks. By eavesdropping, I can still learn something about different stocks and follow other people's journeys as well, which is so critical because that's still experience for you, even though you're not necessarily actively involved in that same stock, following the journey of why they bought, when they sold, why they sold, what their plan was, how they got out, how much they put in relative to it. Like all these things are quite important. So that was a plan. So you've done the course. Have you got your sheet, your personal blotter set up?
Yep. Uh-huh.
Okay, that's great. You'd be
But you on
shocked. A
the
lot of
video, sorry,
yeah,
on the
go on.
video you talk about connecting with you, sharing it with you. And
Yeah,
when I clicked on the share tab, you don't come up. You know, in the
okay.
video, you come up.
Yeah, yeah. So ultimately, it all works on Google. So once you have my email address, you can literally just manually add me.
Just like, okay.
Yeah. So sometimes one of the things I like people to do is to ask these questions in the group. Because once you ask that question in the group, there might be someone else who also, excuse me,
Question.
is in the exactly this, thank you, is in exactly the same situation. And it's very easy for me to write on the group, oh yeah, by the way, just hit file, share, put my email in this box, and I can even give you screenshots and then it's done.
But you know,
But
this the group now.
yeah,
This is the Telegram group.
yeah.
Everyone in the Telegram group, I'm not talking because everyone seems to know what they're talking about. So
Nah,
you're
big
gonna find
assumption. Big assumption.
I'm not gonna
No,
talk.
this is a big assumption. The better assumption to have, yeah, is that everyone's exactly in the same position as you. You have to remember, most people that have done the course, they've done it because in the same situation, like they didn't really have a system they were using, so they've gone to learn this system and are using this system. But what happens is, because you're a long-term investor, you might buy a stock like Groupon a year ago, Snapchat a year ago. You might have just got into maybe at the time you were getting in, you're the question asker. And then you just kind of follow the updates, follow the price moves, know when you're buying more, and so on and so forth. So once you move into the monitoring phase of your portfolio, you might not be looking to buy more stocks. So therefore, you might not be screenshotting your averaging plans and pulling it on the group asking for approval because you moved into the monitoring phase where you're happy with the 5 or so stocks that you bought and you're monitoring them. But in the meantime, when they're doing whatever they're doing, you're watching the group just to see what everyone else is doing and just following from a learning perspective that. Whereas when you're new and you're starting, that's where you will have your questions. For example, let's say you've got an allocated budget, which we'll discuss offline, right? And it's clear what your plan is going to be. Let's say, for example, you had 10 grand and it's going to be 1K per stock or 1.5K per stock, and it's going to be 500, 500, 500. And let's say you pick your trade one for, for say, 5 out of 6 of the stocks. Then there's actually technically no question for you to ask other than maybe give an update and say, oh, one of my stocks has earnings in 2 weeks. Maybe get a bit of thoughts. Or am I following this stock on Twitter? Just so I have light updates. Or have I joined their mailing list? So whenever they send updates on what they're doing, I can psychologically just keep a mental tab on how the company is working and operating internally. These are all the little things you can do to monitor, but ultimately your acting is only going to be if the price drops below a certain level where you buy some more predetermined per the system, or if the price gets to a level where you're going to be selling and taking profit. And obviously on your individual sheet, you will see the alert automatically come up. So have you actually got started with the system? Have you got like a pool of capital that you've allocated for this? And have you bought any stocks yet? No. Okay, wonderful. This is great because it means that you're following the process that, I set out. I don't like people buying without telling me. This is like my pet peeve. I know you've done the course. I know you might understand it, but that extra line of communication, do you know what? I'm about to write an averaging plan for this stock. I'm about to pull the trigger is so important because it gives me a chance to cross-examine whether or not it's the best selection. Because I like people to okay, you're a teacher, for example. Which subject?
Computer science.
Computer science, lovely. My mum's a teacher, science teacher.
I love that.
So what I'd like to be doing with yourself is saying, and we do this role play in the group all the time. Computer science, clearly an interest. Software companies, technology companies, educational technology companies. If there are any that happen to be alerting on the SPA watch list, they become more aligned to your natural interest and your natural day to day. So that will take up at least one stock in your portfolio. Now, I can tell that you're quite busy, and every now and again, you get half terms, Easter breaks, and so on and so forth. And that might be the time where you want to look at your portfolio. You might not really have the appetite to be looking at it every single day. So in this position, what I'll then do is from all the software technology companies that happen to be alerting, I'll look for the ones that have got the biggest market cap. The bigger the market cap, the safer the company. The bigger the market cap, the slower the price moves. The bigger the market cap, the lower the volatility, right? So let's say something like Roblox, right? Or even better, Unity. Have you heard of Unity?
No.
Okay, so Unity is the software that half the games on your Android phone or iPhone will use. It's the C++ for the gaming industry.
Okay.
Okay, it's the Python or whatever for the gaming world, for the gaming developers, right? So obviously you teach computer science, so that might be something that because I've now told you that you actually think, oh, that could be interesting because the phones are always going to need Unity. It's the code, it's the code that all of them use, right?
Okay.
Now I know that it's alerting on the SPA watch list. So actually let me show you something. I'm going to share my screen in a second and actually do a little role play with you on Unity.
Fortnite have shares on there as well. That's what all the children love to play.
Okay, exactly. So Unity share price. This will just pull up the chart. One thing I like to do when I pull up the chart is I'll look at the 5-year. Now, when you see the 5-year, you can see that the first price here is 2020. What that means is this was the price it IPO'd at. This was the first time it joined the stock market. It reached that level of maturity in the stock where it launched onto the stock market. So it's still a baby in a way that's teething. And you can see the journey went all the way up to like 160, dropped back to the 100 level, below 100 to 87, went all the way up to 200. And I sold at both these points. My cousin was a game developer, so when he was at uni, he was using Unity, so I already knew about it.
Okay.
Yes, and I knew that this is a language, like this isn't going anywhere. So when it had their IPO, I was like, I know this company because I've seen the textbooks. But now it's getting a bit more mature. Without being a chart expert, you can clearly see that at this 41 level from 2022, it's kind of looked fairly stable. Very rarely do prices have this kind of bottoming out and then just drop 50%. It's quite rare. And if it happens, we kind of will have a plan for it. So with Unity, for example, we can see that the potential, it's got this kind of potential. We can see that, let's look at the market cap. It's 17 billion, even now. So even when it went up, when it went all the way up there, it would have been close to like 80 billion.
Right.
Anything bigger than 10 billion is a good gauge for American stocks that, okay, do you know what? This company is a big company, right? To put things in perspective, if you look at a company like Snapchat, right now they're about the same size as Unity,
Right.
18 billion. On the watch list, sometimes I need to refresh it. So I'll let that load. But in the meantime, I'll show you what a plan for Unity could look like. Do you actually mind saying how much budget you've allocated towards individual stock picking to start with?
To start with,
Yeah.
I don't really know because you've said like 500. When I've looked at your examples, you tend to say like 500 stock. Is that an average? Is that why you use 500?
No, so like it always depends on the individual situation. So let's say someone starts with 5K for stocks investing. You're not going to spend all that 5K at once. You only spend the trade one money of that 5K.
Right.
So I know for 5K it's 1K per stock, typically 1K per stock.
Right.
Sometimes I will let people have one stock that has a 3K budget or a 2K budget and then 1K per stock for the other three.
Can I ask the reason why you say 1K per stock?
Yeah, this is just how the system works. So this has been tried and tested, and you don't want too many stocks in your portfolio,
Right.
number one. And then number two, you want to give yourself the chance to get involved in the reason you wouldn't put the 5K into one stock, even if you break it down to 1K trade one, 1K trade two, 2K trade three, is you miss out on other opportunities.
Right.
So there is a play where you can have 2.5K and have a two stock portfolio
Mm-hmm.
with a 5K budget, and it is an option. Um, and then it will just be 2.5K allocated to one stock and 2.5K allocated to a budget of another stock. And I'll write you the average and plan out. Um, but once you've looked at your savings,
Mm-hmm.
once you've looked at what you're doing with the index funds,
Mm-hmm.
whatever is left that you say, do you know what? This is the budget that I'd like to allocate for my SPA system journey.
Mm-hmm.
Um, that's the starting point. So if you let me know what that number is, if
Mm-hmm.
you do know it, we can then create what your um averaging plans will look like per stock.
So I wanted to have a budget of 5,000.
Okay. Um, what I would like to do with you is I think you can have one stock that has a 2K budget,
Just
and
one.
then you have two, three stocks that have a 1K budget.
Okay.
Um, the stock that has your 2K budget, I want that to be the stock that's related to your natural interests or your career, because I know that you're going to naturally bump into news and updates in that industry just through your day to day.
Mm-hmm.
Um, and of course, I want it to be a stock that's also American. And the reason I want it to be a stock that's American is that's the country that has the strongest stock market, which is why your index funds are on S&P 500 and not FTSE 100.
Right.
America has better PR than most countries. It's the most mature stock market in the world.
Mm-hmm.
So when you are allocating a bit more capital to a particular stock or a bit more budget, you think about these things. Which country is safest?
Mm-hmm.
Which country is more likely to yield you a return?
Mm-hmm.
Which industry is more likely to be aligned with your natural interests? You
Mm-hmm.
know, like when they talk about picking a stock you've heard of before, or a stock that you know, or an industry that you know. The SPA way takes it a bit further. So instead of just saying, "Oh yeah, I know Apple and I
Yeah.
know Amazon," we're like, "Okay, cool. What industry do you work in? What you may not know the stock, but we can find a stock to match your natural interest, your natural skill set." That's why Unity, Roblox, they spring to mind.
Yeah.
But this is the watch list, and what I actually want to do very quickly
Mm-hmm.
is I'm going to filter for the alerts, for the buy alerts,
Mm-hmm.
and then I'm going to just glance to see if there are any companies I maybe forgot about that might be related to coding or software engineering. And by the way, socially, do you have any specific interests? I don't know, fashion.
I noticed you got Boohoo.
Yeah, okay,
Uh,
that's why I asked this.
what about ASOS?
So Boohoo and ASOS are very
Okay.
similar companies in terms of market cap, and I'm going to show you. So here you can see the market cap of Boohoo is 500 million,
Right.
right? And the market cap of ASOS
Mm-hmm.
is about also 500 million.
Okay.
So they're roughly the same size.
Right.
Um, Now with ASOS, if I hit the max button, you can see price is down here. Even looking at the 5 years, it's down here.
Mm.
The 1 year low is 300 and it's at 400 pence, which is £4.
Mm.
Peak pandemic, it was all the way at 5,700.
Right.
So it's had a massive crash. So likewise, if you look at Boohoo,
Mm.
similar story. So both of them will really Boohoo below the price of 50 and ASOS below the price of 500 are alerts. Now, because they're the same market cap, there's not that much in it. But you might say, oh, do you know what? I shop on Pretty Little Thing more than I use ASOS. But then I might say, listen, then go with the one that you're actually and like you actually like.
Yeah.
Or that you actually are more familiar with. So there actually isn't that much in it between the two.
Okay.
I've invested in Boohoo in the past, and the SPA sell alert for Boohoo was at 300. So
Right.
most people sold at 300 and haven't bought back since. But 50, that's the alert level. And what we're doing here, and what I like about the session, is we've started with something your natural your career side, and we've kind of narrowed down to software engineering, computer science, and then we've looked at your hobbies, and you can see that there are alerts in that area as well, like fashion, like Boohoo, right? And ultimately, what we're doing is we're doing this exercise to select the right type of alerts. One thing I'm going to do with you also with Boohoo is if you look at the top of the watch list, and you'll have seen this in the course, there's something here called the FTSE Index Review. And I'm going to open that link. And what this is going to show you is what does a 500 million market cap look like in terms of on the FTSE 100. ASOS and Boohoo are stocks that are UK companies. And you can see that a 20 million, sorry, the cutoff point for a FTSE 100 stock on the market cap side is about 4 million, 3.5 million, call it. In the pandemic, Boohoo and ASOS were both, from a market cap perspective, like 5 million. So they were actually kind of satisfying criteria to be FTSE 100. But they were not on the FTSE 100. ASOS was on, I think, FTSE 250 and trying to get in. And Boohoo was actually on something called the alternative investment in the AIM market, which means it had a market cap to be on FTSE 100, but it wasn't. Now, the reason for that is when you're on AIM, there's certain criteria you don't need to meet that you would need to meet on the FTSE 100, especially with regards to reporting, financial accounting reporting. Okay, but it's always good to look at this list to see where your Boohoo and your ASOS are. So I'm scrolling down to around that level of 500. Hopefully I see it. But if you don't, there's a quick way. You can just hit the Control F button.
Okay, and it finds it.
And then type in Boo. And it will find it. Here we are. So ASOS is here. So Boohoo has a slightly bigger market cap than ASOS.
Right.
And you can see that it says there on Boohoo's on FTSE AIM index and ASOS is on the FTSE small cap index, right? So they've both been battered. So they're now not. Remember what I told you about market cap? If you're someone that's quite busy, you should avoid small market cap stocks.
Right.
But because I've looked at the prices of Boohoo for such a long time, and I know that it's quite near the bottom, right? This will be an exception to the rule because I know they've got large market cap potential. It's just the price that's affected the market cap. So it's literally a coin toss between the two of them, which one you go for. But in terms of satisfying the price, which is the most important thing for me, they're both below SPA alert prices.
So couldn't you do both?
No, and I'll tell you why.
Okay.
Because if you do both, what happens is 4 stock portfolio, 1 stock at 2K, 3 stocks at 1K each. Now you're going to use up two budgets for stocks on the same industry.
Okay.
If you looked at the chart work we did, they both actually they go through the same, they're
Cycle.
correlated,
Mm.
right? So if Boohoo goes up, the chances are ASOS is also going up.
Mm.
So you only need to pick one. It's a bit like when you're hiring for a job, you see 2 similar CVs, there's only one space.
Mm.
You do all the due diligence up until the point where you actually give one the job offer, and the final job offer could just be the one who smiled the most at interview,
Mm.
right? But both of them should make you money. You're just choosing one, right? And if you were going to write out if I was going to write out a portfolio um for Boohoo,
Mm.
I'll type in Boo in there,
Mm.
1K budget. It will be 300, 300, 400 in this specific scenario,
Mm.
but it could also be 400, 300, sorry, 400, 400, 200. And the reason is price has been battered so much. Um, that's what it looked like.
Okay.
That's what the averaging plan for Boohoo will look like under the SPA system if we were to buy today.
Mm.
So right now, you can see that if the price was to drop to 20,
Mm.
you would spend another 400. If you did that, your average price would be 27 pence. So even though the price drops by almost 50%, it only needs to go up by 7p for you to break even if you spend more. And if it drops all the way down to 10, which is a 75% drop, the price only needs to get to 20 for you to break even. Key thing is you know all of this now before you even hit the first trade. So you're not going to panic when you see price dropping because you know exactly what your strategy is going to do and what your new price is going to be. I know these numbers very quickly because I've been looking at this for nearly a year. And I've looked at the technicals and I know what the numbers are for the model. It's not just me just banging out random numbers in and just seeing. No, I've looked at the charts and I know where these numbers lie. And I know that a long-term average price of 20 for a stock like Boohoo is great.
Right.
Now, one thing that could happen is if the price does fall towards 10, I know through experience that sometimes, because it's a big figure, the price will oscillate around 10. So there's a chance for price improvement. So you'll get the alert at 10, but I'll be trying to see, can we get it at 7 or 8? Because getting it at 7 or 8 decreases your break-even price by 3 pence, which means that by the time it gets to 20, you can actually be in profit. So these are the little tweaks that I might do on the model. Now, let's look at something like Unity.
Mm-hmm.
Let's say that's your, we haven't fully decided yet because I need to still watch the alerts to see but I know off the top of my head, this is a kind of stock that will be a good match for you. I've made money from it 3 times already, over 50% type returns. And I'm currently not in at the moment, but I'm not in because everything looks good. And you can't be the kid in the candy shop that buys all the sweets. Ultimately, there has to be a level of making a decision and making a choice, knowing that another stock might actually do better. ASOS might jump before Boohoo. Boohoo might jump before ASOS. These are the things that are out of our control. We let the market decide that, right? So here you've got Unity with a 2,000 budget. And Unity and Boohoo actually go quite well as a pair
Mm-hmm.
because they have differences. No, the similarity they have is that they both align with some of your interests and natural interests as well.
Mm-hmm.
But the differences are one is UK, one is US. So you already have achieved currency and country diversification. Another difference is one is a large cap and one is a former large cap and now a small market cap company. So you've achieved market cap diversification, i.e. one big, one small, right? And this is very good as a mix to have in the portfolio. You don't want all big companies, all US companies, all small companies, all penny stocks. So if your first two stocks are Unity and Boohoo, and you just watch them for a couple of months before deciding on what your third candidate is going to be, that's a good mix. So Unity on a 2K budget looks like this. 1,000 opener, actually 700 opener, 700 if it drops to 20. I believe if you look at the chart, Unity actually was at some point 20. Yeah. So your second trade is if it hits that record low. It was a record low, by the way.
Right.
And then your final trade is a significant drop below that record low. You can see the journey here. IPO'd around 70, went up to like 200, well, it went as low 90%, 90% drop to 20. Some people did buy down there to average. So some people bought at 50 and then bought at 20 on their plans on a 2 bullet. So that people like that would be in profit right now. You're starting your journey. It may not go all the way back down there again, but we've seen potential that it can get to 100. So there is the kind of potential that it can double from here. And if it doesn't double from here and it falls back down to 20, we've got our plan. We know what it looks like. Again, we're going to put a 7 there. So this is how we'd spend the 2K budget. And if it does drop all the way down to 7, our average price will be 15 if we follow this plan. And if you look at what that means on the chart, 15 is even 30%, so 25% lower than the historical record low. So the chances are we will be able to still break even off that price and have some serious upside. But then we actually know what Unity is. It's not just a random company that's come out of nowhere. Like half the games on the phones most people have are made with the software, right? And you can do a bit of research into the company just to understand a bit more about what they do, right? One thing I look at is when it was founded. It stood the test of time. 20 years is a good test of time for a company to still be alive.
Yeah.
That's their revenue, 1.4 billion. Who is their CEO? John Riccitiello, right? Appointed in 2014. So the CEO has almost been there for a decade. He's seen the boom of technology and, mobile phones and, still active. So you can look him up. So if I just click there, you can look at his Wikipedia. You can also add it. You can actually literally look at him on LinkedIn as well. One thing I quickly go to and look is, university, other companies part of. Yeah, you can literally read up about the man, his early career, Haagen-Dazs, PepsiCo. These are big brands. EA, Electronic Arts. These are big brands. So, okay, CEO seems to have some sort of track record, right? And also became an early investor to Oculus. See, Oculus is the metaverse. People don't know this yet properly, but Oculus is the headset that people wear to access the metaverse. So already I know that my man is switched on.
Yeah.
Right? He was an early investor in that. So he saw it before it's become what it is today. So these are the kind of CEOs you can vouch for and say, do you know what? My school has a good head teacher. The leadership is credible. Right? All right. So these are little bits of due diligence that are quite easy to do.
Yeah.
Don't take too much time. Other things, you can go onto Twitter. Let's see if they got a Twitter account. Unity. Oh, look, they got the blue tick. They're verified. Great. 64,000 followers, which basically means users. Um, they've got other sub accounts like Unity Games, which has 500K followers. You can literally hit the follow button of whatever you want here. And I don't know if you're very active on Twitter, but when you do go on Twitter, it will show you, the algo will show you who you're following, whatever they're tweeting. You can actually hit a subscribe button here so that you'll get a notification whenever Unity tweets. This is the modern way of doing due diligence, right? Not necessarily just going onto the company website, which you can also do, but they tweet a lot of stuff. So why not add it to your social media? Even Instagram and LinkedIn, you can literally start following the companies you've got on these platforms. So yeah, let's just say Unity and Boohoo are your first two stocks. This is what your averaging plans will look like. But you would only have spent £700 and £400, which is 1,100 out of your 5K. So you feel comfortable. You know that, okay, cool, I've started my trade once with these two stocks and I've not spent all my budget at once. You know that, do you know what, there's still 4K. Now you can get on with your life, get on with your day. Maybe in like a month's time, you might say, okay, what might be the third type of stock? Maybe you might have another hobby, or maybe you notice that a lot of babies are being born and or you've got children or grandchildren or nieces and nephews and you notice that they're all playing a game or doing something.
Thanks for
Yeah,
making a grandmother.
congratulations. So let me I'm just talking generally, by the way, not necessarily you, but just to cover different scenarios. So if you look at go back to the watch list again, and we look at some of these alerts, you see that there are a load of there's a commodity play, which is natural gas. Now, people that do have more time, I'll be getting them to give this one a look because it's another diversification. It's not actually stocks anymore. It's an ETF, but it's getting exposure to the commodities world. It's a product that kind of is a bit more volatile, can give you good returns, is at very close to a record low right now. So it's a bit safer as well for someone that maybe is busy, but this
Yeah,
is still a
put that
very
one
good
in
look.
my little list. You know that list
Okay.
for us to put at the
Yep,
in
yep, yep. I like, okay, great. So this might be one that maybe you think about, right? Um,
and I put
but you haven't
games.
yet decided on.
Okay. Shall I tell you what I put
But
on this? Are you interested?
yes, please.
I put Bluebird Bio.
Okay. That's actually the one right next to it. Yeah.
I put Beyond Meat.
Okay. Okay.
I put Wisdom Tree. And I put GameStop Corp
Yeah.
and CLEU.
CLEU.
Yeah.
I can 100% tell you we are not going to be doing CLEU.
Okay, okay.
Too much of a penny stock.
All right.
It's not one that we're gonna do. Even experienced investors, I'm telling them there's no need to touch pennies at the moment.
Oh, it's a penny stock. Okay. How do you know if it's a penny stock?
Okay, so that's a very, very good question. Let's do it. CLEU share price. Market cap, 60 mil.
Oh, it's not a billion.
It's not even 10 billion or a billion. Yeah. It's not even 100 million. So
Oh,
I know straight away this is going to be super volatile,
okay.
less information, less financial reporting. Also, um, I know why you picked it because they're educational company, and I like the
Education,
fact and I like the fact you are following the SPA system. You're picking stocks close to your interests. So you're definitely doing the right things in shortlisting it. But here's the thing: it could be the case, maybe once you start making some profits, that if you did come up with something from this,
yeah.
I say, do you know what? You've made X amount of profit. You can have a little play here because it can do 10x,
Right,
you know. So then, but you're coming from a place of profit
right.
and you're only taking a fraction of your profit to form a whole new budget for something like this that we
Okay.
will still use and write averaging plans for and so on and so forth. Reality is, it's actually at its 1 year high right now.
All right.
You can see that here, 52-week high, 52-week low. Um, Looking at the chart down here, if you were going to invest in it and whatever, let's say you made some profits and I say, okay, cool, you'd be buying around here because the
Right,
chart up until that point will look like a clear dip. Will
right.
never buy after, especially pennies after a jump like that.
Okay.
And you would be in profit. You would have probably made 100 or 200% because you would have done things the SPA way.
Okay.
So there is a way to make money through penny stocks. But for me, system wise, let's make money first via the bread and butter.
Okay.
And then I would even be the one tapping on your shoulder saying, all right, I know you had an interest in a bit of pennies. The situation and the environment is now right for you to take a portion of your profits and to use exactly the same process we use for our bread and butter, but in the world of pennies, where you come up with a little short list, you choose one, we allocate a budget for it. We know that if everything goes wrong and the stock goes bankrupt, it's not going to affect your overall profitability, right? That's the way to do things the right way. Um, so that's why CLEU is a no,
Okay.
regardless of what the price is, regardless of if it's an alert or not.
Okay.
You can have an alert, doesn't mean you have to get in. It just means that from a price perspective, it meets the criteria.
Okay.
Um, Disney is alerting. Um, this is also a large cap. This is also a big, company. You can even put in the level of Apple and Amazon, these kind of in terms of the prestige, the history, the size, um, standing the test of time, like fits all the criteria.
But what about now
Um,
with all the ethical issues around Disney?
these are just problems that businesses face. Businesses that have stood the test of time are businesses that have been able to navigate scandals. I mean, we have companies like Tesco that had a whole accounting scandal, fraud scandal in terms of misreporting their profits, and they're still alive.
Right.
They hire PR teams, they hire um, consulting companies like KPMG to come in and do whatever, replace the CEO, whatever recommendations they need to stay alive and to stay functioning. These big companies always find a way, which is why they've been able to stand the test of time, which is why there's a bit more confidence and comfort in investing in them, especially when they hit SPA alerts.
Mm.
Um, so these are the companies you run to when there's a massive dip in the stock market because there's safety. A bit like how index funds, there's a level of safety there with the big American well-known brands that have massive dips in their price. It's a similar kind of mindset that, you know what, you always pick them before you pick a penny stock.
Oh,
Um, so I'm just looking at the descriptions to see if there's any other plays. But I like the fact you've already gone through it and made a list anyway. Um, you can see there's this company here, 2U online degrees, education. So there's education, software engineering, fashion. Um, there's fashion AI as well, like Stitch. Seems to be a growing thing. This company actually, when I first added it to the watch list, the price was 21 around lockdown times, and now it's at 5. But it went even higher before dropping. So that's why it's probably alerting right now.
What about that Jumia company?
Okay, I like the fact you asked about this. So Jumia is your African Amazon, and it has an interesting, exciting story. And I'll show you what the price has done. So Jumia went from 2 to 70, 2.5 to 70 peak lockdown. So we know that it has this ability that when it does go, it can really move. In the past year, in fact, in the past 6 months, in fact, okay, there's not a 3-month option, but from May to now, it's doubled pretty much. So anything under 5 is opportunity. Because here, if you bought at 5, you'll be buying more at 2, and then you'll be buying more at 1. So that's kind of what the averaging plan will look like. But first thing I like to look at is always a market cap, 500 million. That's where we know where we stand.
Right.
So it's the same market cap as Boohoo, even though it's an American company. Usually that's a red flag because Americans have bigger market caps in general, some of them. But it's an industry that's interesting because it's Africa, it's e-commerce, right? And you might say, actually, it's a good way to get exposure to that market in Africa because you can't buy African stocks on Hargreaves Lansdown, but because it's listed in America, you can. So this is one where you might be able to, there's an argument for the exception. So even though it doesn't fail the market cap test, but even though it's kind of losing on the market cap test, we have price history. It's gone to 70 before from these levels, which means there could be a chance it goes to 10 and you double your money even from here. It is 10 years old. The company was founded in 2012. It's a very interesting industry knowing what Amazon has become, which means that it might actually be a target for a big company to buy.
Right.
So I wouldn't stop someone from buying Jumia at these prices under the SPA system. It's alerting. What I wouldn't allow is you buy Jumia and you buy Boohoo and you buy. I don't like your small cap portion of your portfolio to grow too much.
Okay.
Right? So it might be a case where I say to you, gun to your head, Jumia or Boohoo. Now,
I'd say Jumia.
okay, all right. Then it could be Jumia that you take instead. Now, there is an argument to have both. Because one is American small cap, the other one is British small cap. But then after that, then you can't. So let's say in a couple of months' time, Groupon drops or another company you really like drops a lot. Your hands are tied because you've made your choices, which is okay. There's nothing wrong with that. But it'll be Jumia and Boohoo as your small cap portion of your portfolio, and your large cap will be Unity with your 2K budget. And then I might actually say to you, maybe leave the 1K free in case a brand new opportunity comes out of the blue in 6 months' time. So in that case, what would happen is
500. You only have to be 1,000.
The way the SPA system is set up is such that we want you to make money.
Right.
Once your budget is only 500, so let's say my clients that start with 500, that's all they have. I tell them you're a one-stock portfolio.
Right.
Your one-stock portfolio with the SPA system on a 2 bullet. That's it.
Right.
250, 250. And then you might put 250 in a Jumia. and then that will just be it. And then you're using your virtual portfolio and so on. But you don't want to if something's going to jump 50% and you think Jamia can get to 7.5, if you open with 500, you make 250.
Right.
But you don't want to have too many stocks in your portfolio.
Right. There's too much.
It's better actually to have a few stocks, but you put a lot of thought into them. You've got in at a very good price.
Right.
You're using the SPA system,
Okay.
and then you're waiting and watching. So
Right.
you know that if it does move, you actually make money. You don't want to just make like 20% on £200. That's £20. It's better to make 20% on 500 or a grand or on a bigger opening size. So it's just getting that balance right. And over time, the numbers that I come up with in terms of sizing are the ones that actually make the most sense in terms of value for money plus profit making potential. Because ultimately, our aim is this time next year, your 5K is 6K,
Right.
which might not sound like much, but when you're individually stock picking, you've done more than leaving that 5K on an index fund,
Yeah.
right? So the target is at 20%, which means that if you have a position you opened with 700, you have a position you opened with 500, and you have another position that you opened with 400, you have 1,500 used of capital, right? If you make 60, 70% even on those trade ones, you've hit your target for the year. So you didn't even need to necessarily touch the others. So it's about using as lean amount of capital as possible to still achieve your overall goal.
Right.
So you might not ever utilize the full 5K all invested. For that to happen, you'll need all of your stocks to hit your trade 2 and their trade 3,
Right.
which is quite unlikely, but not impossible. And that's the aim of the game. It's a cautious approach. If you actually look at it, we're actually using a very cautious system here, a cautious approach. And that's why all my clients should have confidence in using it, because you can see it's quite cautious, because even if you did have so that is Jumia, it would be like a 1K budget, which I'll put up here. Let's say you bought it at 5, the next one will be 2, next one will be 1. It will be like a 400, 300, 300. That's what the plan for Jumia will look like. Let's say the price drops from 5 all the way down to 1 and you buy more. Your break-even price will be 1.88. It only needs to go up to 1.88 for you to break even, and then it can go. So because you know that now, you won't be afraid of it falling to 1, because you know that your plan will mean that you're only 0.88 away from break even if that scenario was to happen. So when it's dropping, you're not worried, because you know once you utilize your full budget, you're still going to be in touch and distance to break even. But obviously, you're not just trying to break even. We're trying to actually make money. So it can actually happen this way, and then it goes up all the way after. And then now you've got 1K invested, and that 1K you make 100% on it. So one stock now has the potential to do your whole year for you. Right. So sometimes I do want it to hit my second price.
Right.
Rather than just go, because I know I've got a plan for it that eventually will put me in a position where I've got the opportunity to make more. Ideally, you want the stock to drop and then go. So you get to use up the capital that you've set aside for it, the budget that you've set aside for it. So let's say, okay, cool. And I'll leave this LNGA one in there as well, with a 1K, because this actually could be what your first 4 stocks look like. And I'll tell you why I would advise against it in a second. It's the kind of thing I will do with 5K, because I've got a bit more time and I like the mix. It works. But I'll tell you why I wouldn't recommend it for someone just starting on their first 4 stocks in a moment. So with a 1K budget, yeah, it will look like this, 500. This is what it will look like. So let's say you did all your trade once, right? You would actually have spent um 2K out of your 5K. So there'll be 3K lying as cash, and there'll be 2K deployed, which makes you feel at ease. You know your money's not in there. You know that you've got 4 stocks you actually like. You've got Jamia, you've got Boohoo, you've got Unity, and you've got commodities play. So the commodities, e-commerce, software development, fashion. It's actually, if you have my risk profile, this is actually a good mix of 4 with a 5K, right? But what I want you to do is I want you to put this mix into your virtual.
It's into my virtual.
Yeah, so you can see what that mix would have done,
In
right?
my butter. Oh,
Yeah,
my virtual average price calculator.
in your actual live portfolio, so virtual portfolio.
Virtual portfolio.
Yeah.
And put it at the top, not in the orange section.
Like here.
Yeah, that's the top. That's what I'm
Yeah,
calling.
basically. So you have all those 4 on your virtual on your sheet, even though you only invested in maybe 3. Because then you can say, do you know what? It was a right decision for me to not to put all 4, but I've still been able to see what would have happened. And it could be that you did make money on all of them, but you did the right thing.
Right.
Because I'm coaching decision making. So I'm actually going to let you know what a good fourth what you're going to actually do is, obviously Unity has the biggest market cap, right? You actually need to decide which of these 3. It's going to be basically Jumia or LNGA, because Boohoo diversifies you on market cap and also diversifies you on currency. LNGA diversifies this better than Jumia because it's commodities.
Right.
But then you're busy, right? But even though you're busy, as long as you can check it once a day, just to check your sheet that nothing crazy has happened. And obviously I have this thing where I remember my clients that get involved in certain things like this. So in the group, I will at you.
Right.
So it's not that bad if you're busy, if at least here's my thing. People check their bank accounts regularly, people check social media regularly, people check their emails regularly, their WhatsApp groups. So why should you be so busy to just check?
Yeah.
So I try and coach people into a mindset of finding time.
Yeah.
But that's not going to be everyone. Some people literally they're busy. So this is where I might say to you, okay, if you've got time, LNG might be better than Jumia.
Right.
From a diversity point of view, because it gives you exposure to a commodity, it gives you a bigger chance to make short-term money. That's what the plan looks like. Jumia has already moved off like 100% off its 1-year lows. So LNGA is actually probably more of a play that can actually make you money, even though it's a bit more risky because it's a riskier instrument, but it can't go bankrupt because it's not a stock. So maybe it's one you just look at, or maybe it's one you say, do you know what? I'm willing to give it a go with a 1K budget. You will actually do this one in 2 transactions. You'll buy at 0.4 and you'll buy at 0.1. Simple. If it gets down there. Otherwise, you do nothing. All right. There is actually even an argument for LNGA that you just do a one bullet. You never sell it. You just have £500 in at this level and that's it. There are people who've averaged this thing and their overall average is actually 0.4, the current price. So that might actually be a play for you. £500 in, that's it. I would support that.
Right.
And then the rest of your capital, you just leave it, we watch, we wait. Because more times than not, every couple of months, an opportunity too big, too good to be true comes along. So I like people to always try and leave that one space for these type of opportunities. If I was then to write out what an ideal transaction next stock, let's say you start a company, you hire the IT guy, you hire the receptionist, you hire HR, you hire a software developer. Now you're looking for, what else do I need for my company to grow? Maybe we need a therapist, right? For all my employees or something like that. Or maybe I need an intern, someone straight out of uni now, a graduate. So you've looked at the existing team and now you're thinking, what kind of profile do I need next? So let's just say we have gone with Unity. And then we've gone with Boohoo and we've gone with LNGA, right? As the first three. Now I'm looking at a few things. I'm saying, okay, we only have one large market cap. So the next stock probably should be a large market cap. LNGA and Unity were stocks that maybe you hadn't heard of before, even though they might be in your industry. Boohoo is one you know. So let's say, do you know what? The next stock has to be a stock I know. So we start mapping out the criteria based on what we have already. It has to be a stock I know. It has to obviously be an SPA alert. It has to be an industry that I follow, I have a natural interest in. It could even be fitness because maybe you got a Peloton bike or something like this. It doesn't necessarily need to be your career or, it could be something that you just, an industry or an area that you have a natural interest.
Yeah.
Because you already have two slightly higher risk profile plays in Boohoo and LNGA, then it's like, okay, the next one has to be a bigger company, a larger company, a safer play as well as a company that I know, as well as ideally an American stock, because we only have one American stock. So I'd rather have two American stocks, one commodity and one UK. So you already know that these are the three criteria that your next stock needs to be meeting. And then it has to be a stock you know. A stock you know, a stock with a large market cap, a stock that's American. And obviously that's an SPA alert because all stocks you buy should be an SPA alert. And you know you've got a 1K budget for it. And then you're just waiting for an alert to match that. There might be already one that matches that, but maybe you want a better price or whatever. But you've used the information of what you have already to influence what the next candidate should be, which is why I tell my clients, just because I buy a stock doesn't mean you should buy it, because it might not fit in with what you have already.
Yeah.
Okay. Now you might even add another criteria. It might not just be that you've heard of the stock, the company. It might actually be you use the products, right? So let's say it was something like Apple. I've got an iPhone, I use it. Or I've got a Tesla, I've got the car, right? So you might actually have something, a mindset like that. Like, do you know what? I actually want it to be a big company, a company that has got very good PR, like Tesla does, right? There are a lot of people who don't know nothing about stocks, but say, yeah, I invested in Tesla. It's got good PR, right? Elon Musk. So maybe it's that kind of play where if Tesla has a massive dip, yes, this might not be the one that makes you a lot of money yet, but it ticks the criteria.
Yeah.
Right. And then this might be the one that you say, do you know what? I want a Tesla on an Apple or a Google or a PayPal or, something that I actually use quite regularly, or a hair product or a skin product. I don't know, Kim Kardashian's, there's Skims or, Beyond Meat because I'm a vegetarian, you know. Um, but I feel like I haven't discussed Beyond Meat, but ultimately it will be a choice between Beyond Meat and Unity. You won't have both.
Right.
I'm swayed more to more Unity because it's a tech. Beyond Meat is not a tech, it's a nutrition.
Yeah.
And some of these companies, they struggle.
Right.
Biotechs, Bluebird Bio, I would advise against
Mm.
because biotech companies, they can be very sporadic in their price movements and they're not they are technology because it's biotech, but they're one of the riskiest types. Even large cap biotechs are still kind of risky. Um, but in terms of the here and now, you might even hold off on Unity because you want to maybe try and get it at 40. Because if you get it at 40 and it gets to 50, you're already 25% up. So you look at how, what the low has been on the year, and try and see, do you know what, can we get a dip? Maybe just a bad news day that enables me to get a better price. If you don't, it's not the end of the world. It's an SPA system. We know how we're going to act if the price drops. Um, but yeah, sometimes when a stock has had that 50 to 100% bounce off the lows, you can be a bit more, let me sit on my hands a bit and just see what it does over the next month. It's the stock I want, but I just want to see, can I get another little sale? Can I get price improvement at 40? Because 40 to 44 is a 10% move in profit. So just waiting to try and see if you can get 40. If it does get back up to 44, 45 on its way back up, you're already 10% up. So sometimes, regardless of if something's a good price, there is still an argument to see if you can get a slightly better price over like a 1 month time period. Obviously, you need to be in it to win it. So eventually you do have to bite the bullet, but it doesn't need to be oh yeah, these are my free stocks. Let me go bang, bang, bang today. Right now, the market is giving you time to think. There are very few stocks that just go and it's like, oh, I missed it. Boohoo has been down here for nearly a year. Sorry, it might be 6 months, but Boohoo has been down here. I'll show you since like September last year. So it's kind of giving you, market does give you chances to not need to rush in. So this is just like, right, I kind of know which free stocks I'm getting in. Maybe I'll take LNGA today and Boohoo because it has been down here for a year. So it has bottomed out. I have seen that the price has kind of stabilized plus or minus this level for a period of a year, which is quite a long period of time. So maybe now the chances that it starts to have that move up are more likely now than a year ago when it first came down to this price, right? And you might, use that same train of thought for some of the other stocks as well. So the longer something has been low, the higher the probability that the next move will be up, like interest rates for the past 10 years. And this is just a common price pattern that we see when we talk about understanding price action. And sometimes price action is more important than actually the company. But obviously, you're still trying to optimize all the different things that you think about when you're trying to identify your first couple of stocks to get. But yeah, I just wanted to give you this kind of a session how to get started. Um, I'm actually going to put it out. Maybe other people will feel a bit more encouraged as well. And maybe it's like a good refresher for everyone as well that's done the course. Um, so they can kind of just see like still a lot of thought goes into it. You can do the course, you can understand the course, but still having this dialogue that we had on Zoom, it's possible to actually have this dialogue at our end of month sessions as well. It's possible to have this dialogue through the group by typing. I've looked at the alerts, I've come up with a list of 5, and then you tell me your list in the Telegram group, and then in the Telegram group, we're doing the role play, right? Process of elimination and so on and so forth. So you know, okay, cool, maybe these might be my 2 or these might be my 3. You write your averaging plans out, I tweak it for you, and then you say, okay, cool, I'm on standby now, ready to pull the trigger. And then maybe a week later or a month later, you say, do you know what, I'm ready to get into Unity, I'm ready to get into Boohoo, I'm ready. Or it might be all in the same day. Bottom line is, you've had that dialogue with the group, with myself, and I basically role played what we could be doing on the Telegram group, on Zoom, on this video call. And I hope, you know, anyone watching kind of gets the idea a bit more, and just gets more encouraged to get involved. So yeah, I like the fact we've had this discussion. Hopefully you feel a bit better, a bit more equipped, in terms of getting started. You've got some ideas. I will never tell buy this, buy that, buy this, but I can still give you pointers of, you know, what I would do in your position using the SPA system, using your natural interest, using, you know, what, you know, I might not do this mix myself. I do actually own Unity, or have owned Unity in the past. I currently own LNGA. I don't own Boohoo, right? Because I picked something else. I think Groupon. Um, I did Aston Martin instead of Boohoo, and Aston Martin did very well. Aston Martin did what, 3 or 4x. It's gone from, I think, 50 AE levels to 350.
Yeah.
Aston Martin, from the alert. It had a rights issue. I wrote out what the rights issue means. Rights issue is where, like, a company decides that they're going to issue you shares at a discount to the current price, especially if you already own shares in the company. But if you, Aston Martin had a unique case where even if you didn't own shares, you could get involved in the rights issue and get the price at a massive discount. And yeah, we can calculate what the theoretical price should be after the rights issue finishes. And then if the price falls a significant discount from that, it's a buy. So everyone that got in, we made 100%. The price, after we sold, the price even doubled again.
Wow.
But the price we sold at, some other people would have been buying, and they're just selling at 100%. And there's some people who sold half where the SPA sell alert was, and they're selling the rest now. So you'll see some of these in like the alerts channel when I'm telling people, okay, cool, if you're still left in, this is the time to actually just liquidate. So yeah, that's the thing. Like, sometimes you have 3 opportunities, but you just choose one because you think it might move first. You choose one because you like cars more than you like fashion, right? But ultimately, we let the market decide on timing, whether it's going to give us our returns now or they're going to give us in 5 years' time, right? We try not to predict or focus too much on when the market is going to give us our money, because we can't control that. What we can control is the price we buy, the system that we use to buy, the decision-making process, the amount we put in.
Mhm.
These are the things we can control, and knowing roughly how we're going to sell, how we're going to take profits. The bits we can't control is how the market moves, when the market moves, how much it moves by. But we cross those bridges when they get there. But we just follow the strategy that we have.
Mhm. So
Do you have any? Go
sorry,
on. I was going to ask you if you had any more questions for me. So
before we go,
yeah,
so I get the alerts, right? I've got the
yeah.
stock pickers alert, and I get the other alert, and I'm in the other group,
Hmm.
2 groups. Is there a monthly meet up on Zoom or WhatsApp or
Yeah,
anything?
I'm gonna put the one for August.
Because I obviously
Yeah,
missed the one for July.
there's a recording. Sometimes I might do the one in July, like the first week of August, and then do another one at the end of August. So there is one for July that we'll do, like maybe in the next week. Sometimes we might have two in a month. Sometimes we'll have once every month. It's very tough to have like a fixed day because there's some people that can only do weekends, some people. So sometimes I just try and play by ear rather than just have them all fixed in the calendar.
So if I
But
miss,
you'll hear details of the next one like
okay,
soon.
and it will be listed in the what group will I see the notification?
You'll see it in the mentoring club on Telegram.
So am I on that list? Because I don't think I'm on that. I'm on the SPA alerts one and the Stock Pickers Academy one.
Okay. You
So
should actually be on the because you pay for it. You should be on the there's another group that's I'll send you this. I'll send you this after. But you
okay,
know the links that came on your email. One of them would have been for the alerts channel, and one of them would be for the mentoring club.
I need to if you can
I'll resend it to you.
yeah.
I'll resend it to you. Um, Sometimes I put it in the alerts channel anyway as well because it automatically feeds into the mentoring club. Everything I put on the alerts channel feeds into the because it's part of the package anyway. Feeds
Yeah.
into the paid mentoring group.
Okay.
So yeah, if there's anyone listening that's just on the alerts, yeah, you should be in the main Telegram group as well.
Okay.
So yeah, you should definitely hit me up, especially if you've done the course and yeah, it's part of your package.
All right then.
But yeah, it's been a pleasure having a conversation. Hopefully, you've got a lot of takeaways. You feel a bit more confident to get started. And actually, what I want you to do is when you do get ready to pull the trigger on something, screenshot your plan. Ask me loads of questions in the group if you still have them. Um, Put it in the mentoring club, and then I know, okay, yeah, you're getting active, you're about to go. I'll sign off on it, and then journey starts.
Brilliant. Thank you.
No worries. All right, you have a good day,
And you.
and I will see you in the mentoring club. I'm actually going to message you now, so you've got the link to go straight into mentoring club. Make
Thank,
sure you're there. All right, you take care.
thank you. Bye.
No worries. All right, bye. And there we have it. Another episode. Um, I have so many different stories in SPA. And I'm going to get through them one by one. I hope you've enjoyed that one. I gave you a lot of content in there. I gave you a lot of content in there. You get a little deep dive into the course, what it looks like, what my sessions look like with my clients. Um, so please, if you haven't done the course, do it. It's fantastic. If I do say so myself, it's a good way to have a system that you're using that you can use now. And yeah, let's make this money. Let's do this stocks thing. Tune in for the next one. All the stories are all going to be different. Some people will have started their journey. Some people will be about to start their journeys. Some people will be 1 year deep, 2 years deep. I just want to get as many different types of profiles of investor covered, and hopefully you can relate to one, two, or multiple. It's good that these stories are getting told and you're getting to see this kind of content because it's quite rare. See you on the next episode. Stay tuned. Please subscribe. Please subscribe to YouTube so you get notifications of the next ones. And please share my videos. Please share my videos.